So let's answer problem 18-1 to 18-4. The computation here, class, would be very simple. You'll have to simply go back to your equity method. If you can remember your equity method under the investment in associates class, then that will greatly help you in answering problems involving joint arrangements. Okay, but even when we discussed your home office and branch accounting class, we also mentioned about your equity method. I told you to think of the equity method when accounting for the reciprocal accounts. And in our discussion in the home office and branch accounting, I told you of the four transactions that will affect your reciprocal accounts. And these transactions are investments, withdrawals, share in profit, and share in loss. So if we are to maintain your investment in joint arrangements as under the equity method, then you will have to remember these four transactions. Remember that investments and share in profits will increase the investment account, while withdrawals and shares in losses will decrease the investment account. And that is essentially what will happen in the problems that we will be discussing today. So in problems 18-1 to 18-4, the questions are as follows. 18-1, what is the net income of entity A for the year ended December 31, 2017? For 18-2, the same question, but for 2018. And then for 18-3 and 18-4, we're asked for the balance of their investment accounts. Okay. So for 18-1 class, what is the net income or loss of entity A for the year ended 2017? So since we're asked for 2017, we will focus in 2017. And if you go over the transactions in 2017 class, you will determine that there are only few items that will affect your net income. Now, at this point, if you still do not know how to compute for net income, then again, that would be a big problem. It's not because the topic is difficult, but it's simply because your basics are still not good. Okay. Letter A, will it affect the computation of your net income? The answer is no, because letter A describes the investments made by the parties. Letter B, will this be relevant to our computation of net income? Yes, this represents expenses. Next, letter C would be this would be an acquisition of an asset. Okay, these alone will not affect the computation of our net income, but always be careful, class. If you acquire a long-term depreciable asset, expect that you will have to have depreciation expense. But we will explain later on why we will not have a separate computation for depreciation expense in this problem. Letter D, entity A acquired land at cost of 3 million. Again, this will not affect your computation of net income. Letter E, construction of a building. Again, it will not affect the computation of net income. Letter F, operating expenses for the year amounted to 1 million. Will this be included in the computation of income? Yes. Now, it's because, class, we're already given with our total operating expenses, we are not expected to compute separately our depreciation expense. Depreciation expense will form part of your operating expenses. So what does that mean? It presupposes that the 1 million already includes your all other operating expenses, including your depreciation expense, if any. Okay. Letter G is a source of income. So will this be a part of our computation for net income? Yes. Okay. Letter H would be the distribution of the net income. So out of these 8 items, only 3 will be relevant in our computation of net income. And these are your rental income, your taxes and licenses, and your operating expenses. So rental income is at 5 million, and then Taxes and licenses is 200,000, and then operating expenses is 1 million. So total expenses would be 1,200,000. Okay, and then deduct that from your uh, rental income of 5 million. Uh, you will have an answer of 3.8 million. So that will already be your answer for 18-1. Does it require new knowledge on your part, class, to be able to answer 18-1? The answer is no. Okay. Next, what is the net income? Okay, this time for 2018. So focus on the operations in 2018. Operating expenses. This time it specified that depreciation is included in the amount of 500,000. Okay, and then what else will be relevant in our computation of uh, rental income? Again, would be 8 million. Declaration and payment of dividends, class, will that affect your computation of income? The answer is no. Okay. Next, each venture receive a share. Again, the last one is just a distribution of your profit. So we start with our rental income of 8 million, and the only expense here would be our operating expenses amounting to 500,000. So the net income here would be 8 million minus 500,000 will give you 7.5 million. Okay, so that will be the answer for 18-2. Okay, what is of more importance would be knowing how to answer 18-3 and 18-4 class. So basically, equity method. Investments increase, share in profits increase, withdrawals decrease, share in losses decrease. Okay, let's start with Company X. Let's go over the 2017 transactions for Company X. Initially, Company X contributed how much? 10 million. What kind of transaction would that be? As far as accounting under the equity method is concerned, that will be classified as an investment transaction. So what will it do to your investment? It will increase. So basically, that would be the initial balance. You will have an initial investment of 10 million. Okay. Do nothing for letter B because they will just have their ultimate effect will just be reflected in our investment when we recognize our share in the profit or losses. Okay. What else did Company X do? Basically, the rest are just operations of the joint arrangement class. So again, what are the possible transactions? Investments, withdrawals, profit, or losses. We already have one investment here, the 10 million. Do you have withdrawals? Normally, the withdrawals here will come in the form of dividend distribution. If a party to the joint arrangement receives dividends, then that will be considered as a withdrawal transaction. Were there dividend payments in 2017? The answer is no. So we look for profit or loss. Was there profit or loss in 2017? Profit of how much? 3.8 million. So will this entire 3.8 million go to the investment of, who is this? Company X? No, because not the entire 3.8 will go to Company X, only its share. How much is the share of Company X in the profit of the joint arrangement? 40%. And how much is 40% of 3.8 million? 1,520,000. And what will it do to the investment account? Will it increase or decrease? Increase. So you add that with the 10 million, the investment balance of Company X in entity A would be how much? 11,520,000. Okay, let's answer 18-4. What is the interest of Company Y? This time from the perspective of the other party. But what's the difference between this one and the previous problem? It will now be up to 2018. Now again, the balances here are permanent balances. So the balance in 2017 will be carried forward to 2018, and so on and so forth. So to answer 18-4, we will have to go back to 2017 to update the investment balance of Company Y. So what did Company Y do in 2017? It also made an investment in the amount of 10 million. Okay, and what else happened in 2017? It will have a share in the profit of the 3.8 million, but only for 40%, which is 1.52 million. Okay, essentially the same. Next would be for 2014. Was there an additional investment in 2014? No, but what else? Sorry, 2018. What else happened in 2018? Payment of dividends. And again, how do we treat payment of dividends as far as the investors are concerned? This will be treated as a withdrawal transaction. So what will be its impact on the investment account? Minus or decrease. How much was the dividends declared? 3 million. Do you deduct the entire 3 million? No, because Company Y did not receive the entire 3 million because the 3 million was for all parties involved in the arrangement. How much then is the share of Company Y in the 3 million? 40%. So 40% of 3 million will give you 1.2 million. Again, deduct that 1.2 million. What else happened in 2018? The operations resulted in profit or loss? Profit. How much was the profit in 2018? 7.5 million. Are you going to add the entire 7.5 million? No, you will just get the share of Company Y, which is only 40%. And how much is 40% of 7.5 million? 3 million. Okay, so the investment balance, plus if you were asked how much the investment balance of Company Y in 2017, it would have been 11.52 million as well. Okay, then for 2018, what are the changes? The share in the profit of 3 million and the share in the dividends of 1.52 million. So the balance or the interest of Company Y in the joint arrangement would be how much? 10 million plus 1.52 million plus 3 million minus 1.2 million will give you how much? 13,320,000. Let's have 18-5 to 18-8. 18-5 class, you're asked the total assets of R. R is one of the parties to the uh, joint arrangement. Uh, okay. So again, remember, class, in a joint operation, its share in the assets and liabilities will be included in its separate financial statements. And that is why in 18-5 and 18-6, you're asked how much would be the total assets that will be included in the separate statement of financial position for R and S. Okay. So what does the problem say? Are you just going to split the 1,200,000 between the two class? The total assets of the joint operation is 1,200,000. Are you just going to split it between the two? No, because they have specified rights over the individual assets and liabilities of the joint operation. What does the problem say? R has R has rights to all of the transportation equipment. Okay, but it will also shoulder the entirety of the obligation to pay the accounts payable. What will happen to the other assets that were not specified? Other assets, they will share it at 50%. Okay, so was cash specified to anyone? The answer is no. So what will happen to the cash? It will be split between the two parties. How much will be the share of R then in the cash? 50,000. The transportation equipment, will this be split between the two? No, because again, this will be solely attributable to R. So you give the entire 600 to R. How about the furnitures and fixtures? Was this specified? No. So what will happen? This will be shared between R and S. How much then will be the share of R? 250. So the assets that will be included in the separate financial statement of R would be cash of 50, transportation equipment of 600, and then furniture and fixtures of 250. That will give you a total of 900,000. 18-6, now this time for S. Does S have a share in the cash class? Yes. Does S have a share in the transportation equipment? No. Does S have a share in the furnitures and fixtures? How much is the share of S in the cash? 50,000. In the furnitures and fixtures, 250. So the assets that will be attributable to S, which it will report separately, will be how much? 300,000. Okay. So can you imagine how the next exam would be the easiest exam that you will have, class? 18-7, this time for the liabilities. Okay, how many liabilities do we have here? Only two. Accounts payable and other liabilities. Will the accounts payable be split between the two parties? Okay, it will only be given to R. So which one will be split between the two? It will only be the other liabilities. So if you're asking for the liabilities of R, the entire accounts payable of 600,000 will go to the R plus its share in the other liabilities in the amount of 100,000. So the liabilities of R from the joint operation will be 700,000. How about for S? Just the share in the other liabilities in the amount of 100,000. Okay. Let's include 18-9 and 18-10. Okay, what is the interest of X as of 2017? What is the interest of Y as of 2018? So for X, class, what happened here? The assets and liabilities held in Bank XY are the assets and liabilities of Bank XY and not the assets and liabilities of the parties. So banks X and Y each have 40% ownership interest in Bank XY. And the remaining 20% is held by outside parties. Okay, who has joint control here? You will have X and Y, but they are not the sole owners of the joint arrangement trust. You have other parties owning 20%. Okay. So what happened in 2017? X made an investment of 50 million. So that will be our initial balance, class. And then what happened in 2017? There were revenues of 10 million and then expenses of. So you will have a net income of 4 million. Do we add the 4 million to the 50 million of X? No, because the 4 million will be shared. You only add the share of X. How much is the share of X? 40%. And how much will that give you? 40% of 4 million? 1.6 million. What will it do to the investment balance? Increase or decrease? So the initial balance of 50 million plus share in the profit of 1.6 million. Our answer should be 51.6 million. Okay, the answer here should be 51.6 million. Okay. The answer is not in the choices. The answer should be 51.6 million. Next, what is the interest of Bank Y, but this time for 2018? But again, knowing that this is a balance sheet account, you will have to go back as far as necessary. Okay, so since it only started in 2017, okay, how much was the investment of Y in 2017? 50 million. What happened in 2017? Profit of 4 million. How much is the share of Y in the 4 million profit? 1.6 million. Okay, and then that means by the end of 2017, the balance is 51.6 million. Then 2018, what happened? Additional investment of 5 million. What will it do to the investment balance? Increase or decrease? Increase. Okay. And then there's a profit of how much? 5 million. How much is the share in the profit? 40%. How much is 40% of 5 million? 2 million. Okay. But what else? What will the 2 million do? Deduct or decrease or increase? Because it's a profit. Now you have dividends of 4 million. Will that affect the investment balance? Increase or decrease? For how much? The 4 million? No, only the share in the 4 million, which is 1.6 million. So our answer here would be 50 million plus 1.6 million share in the profit in 2017 plus additional investment of 5 million plus share in the profit of 2 million minus the share in the dividends of 1.6 million. Your answer here should be 57 million.